Awesome.
Love
So
both
I'm
coffee.
gonna record this. So appreciate everybody jumping on here today. So Tracy and I own Infinite Wealth Fund, which is an investment fund, and we are actually partnered with George on a short-term rental portfolio in St. Louis. And so this call today, though, George has just offered his time and experience and knowledge, and is willing just to kind of walk everybody through what his experience in the short-term rental space. And so we are very grateful to George for giving us his time today. So it's going to be about an hour for the master class. At the end, if there's questions and things like that, we can take some of those questions. So during the presentation, if you guys can go on mute, and then if you do have specific questions throughout through the masterclass, go ahead and just throw them right in the messages tab, and then we can knock those out all at one time, so we don't interrupt George and him giving us all his amazing knowledge. So, yeah, so if you guys can use the message feature, that'd be awesome. If your cameras can be on, that would be fantastic. If some of you can't, totally understand. And so I'm going to turn it over to George here and let him really just rock and roll. So, George, appreciate it.
Well, appreciate you, Drew and Tracy. Thanks for having me here again. So, guys, are you ready to get some high-performing short-term rental nuggets on? So get your pen and papers out because today we're going to learn how to create high-performing short-term rentals for cash flow, lifestyle, and long-term wealth. Okay, so quick welcome. So we're going to walk you through a five-pillar framework. So this is how we operate, and I'm going to show you the back end of my business. We're going to go through some case studies and how we transform properties pretty much into each one of us kind of like its own business, you know. So and I was having a call with somebody here in the group earlier, and I was letting him know that part of our business model is also a lifestyle piece. We like to build our life first and then our business around our life. So a lot of these properties that I'm going to walk you through today are some of them are lifestyle properties in which we personally go and attend to visit on off-season times to go do some asset management, right? So, and at the end, I'm going to make an invite for you guys to follow us or talk to the team about how to talk to us about the investment portfolio that Drew mentioned at the beginning of the masterclass. So let's get started. Another thing here is we're going to show you how to identify the best markets and acquire high-performing STR properties. We're going to walk through how to double your nightly rates with optimized design. Talking about some marketing, right? Marketing is pretty much everything. And when it comes to this business, marketing is very, very important. And I'll show you kind of how to, we pretty much book these properties all year round, as well as we're going to talk about automation, guest experience, and some operation that helps us reduce stress. I mean, some of you guys know how property management works. So, why listen to us? Our strategies are tested and proven. I've personally been doing this for quite a bit. This is just a financial reporting of my personal portfolio. My wife and I have a personal portfolio, and this is just last year. And right now, it's not including our fund or our other assets, right? So we've done over 130 transactions, STR transactions, and we do about 2.5 million in revenue altogether across all of our assets. And again, we are scaling our portfolios, and we invested over $1 million of our own money over the past 5 years into short-term vacation rentals. So let me walk you a little bit through some of our higher end short-term rentals. This is one in Alvin, Texas, that makes about 110K a year. We just did a $10,000 revamp with some really cool games. And also we repainted the patio that you see there, put tents and a bunch of really cool things. So we'll be taking pictures for that one to increase the revenue. This one does about 140-ish per year. It's a waterfront on Seabrook, Texas. Super cool. We've also done some additions to that. This one is property Southwest Houston in middle of nowhere, doing about 170,000 in the middle of the city. I call nowhere, it's just in the middle of the city, so not nowhere. Um, so humble beginnings, a little bit about myself. I was born and raised in extreme poverty. I lived in an adobe house, and half of my rooftop had caved in when I was probably about, nine-ish or eight-ish. So we lived in half of a house, and we didn't have money to repair the thing. So we lived with chickens around, and we were very, very poor. That's the outside of our bedroom, and that's me and my brother, probably 8 or 9 years old. So the city was called Tarapoto, and we lived there until about 2000, right? So very, very humble beginnings. I moved to the US at 15, didn't speak any English. So that's me wearing my Jersey Village Falcons soccer shirt at probably 15 years old. So then I started my career in the service industry. I was what we call a host, right? A promoter host in Vegas. I used to run everything, right? So I did this for 10 years. I used to run the marketing promotions and event planning for about 80 different venues over 10 years. And I made a lot of friends that I don't even talk to anymore, so call it a nightlife promoter, but I built a very, very, very good brand. And we did this for many, many years. And at the end of the 10 years, I didn't build any wealth. So there you have it, right? Then that's me chasing the American dream. Um, After this venture, I felt stuck, right? And I'm gonna tell you a little bit about what the turning point was. I invested. This is actually 300,000, and I wanted to put 200,000 because I put 100,000 out of my own retirement that I was saving in a limited partnership that I invested in as a limited partner that failed, right? The nightclub was called LaRue, and that's opening day on the picture on the bottom, and I had invested quite a bit of money to build this thing out on a land lease, and everything fell apart. Just about a year and a half later after you opened. So this is 32 years old, so about 8-ish years ago when this sort of happened, so 2016 or 17. And that was me, just the big promoter guy, right? So the turning point was me losing everything. I hit rock bottom. So I had to start over, exhausted from the nightlife grind, and really with a big dream and a drive that I have today to make an impact in this world. So I pivoted to real estate, started with fix and flips, working 18-hour days. That was me at my first real estate event. And I did my first seminar on January 19th of 2018. And then a month later, I closed my first deal, right? And this is the deal. Like we purchased this as a fix and flip and basically zero out of pocket. We bought at the right ratios, and then we ended up making about 46,000 on that deal. Okay, so by the end of 2020 or 2019, I had quite a few properties, right? I had about 40 doors. So in about a year and maybe 6 months, I scaled to 40 short-term rentals. And I scaled a little bit too fast, so operations were hectic and crazy, but it was mostly with small apartments. And when COVID hit, it hit us pretty bad on the revenue side because I didn't diversify, right? You've heard about diversification. Well, all my properties were within a 2 mile radius. A ton of them were rental arbitrage. I was renting, and only maybe three or four were in the suburbs. Well, now we are in four different states, and we are investing and diversifying into different types of not essentially asset classes, but different markets and also different seasonality patterns, right? When it comes to short-term rental. So we pivoted immediately into from low margin into higher end STRs. So we went from 55-ish units in 2021 to 16. Now we have about 20 right now that we personally own. Properties doing about 1 million a year, and today we own about 9 million in real estate. So it's all designed, lifestyle design. So it's more freedom for us. Our calendars are 50 to 60% occupancy, but we make probably about one and a half times the gross revenue we did back in 2020. But we have one third of the work, one third of the properties, one third of the stress, probably about 10% of the stress. So that's me, my wife, and our now 2.5-year-old. That was when he was about maybe one and a few months. We were in Puerto Vallarta on the beach, doing really cool things. So, and why am I sharing this with you? Because I went from broke and struggling to $1 million portfolio personally, right? Does it include our fund and the impact we're building to our partnerships, which is amazing, right? So And I've made the mistakes. We built the systems operationally, and we've scaled predictably, and we're scaling today, right? So what I did is over time, I created a formula or a framework that has 5 steps, which is what I'm going to walk you through today. That pretty much breaks down how I do my business every day. So I'm going to walk you to the back end of my business. And our mission is to help 1 million real estate investors build wealth and freedom through short-term rentals. Today, I speak on really cool stages, more on the 2021 to 2022 times. I used to speak in way more. Last couple of years, we've been building our investment business a lot more. So I've kind of slowed down a little bit there with with our son and everything. So anyway, so no guesswork here. I'm going to show you guys what we're doing. So let's dive right into pillar number one. Okay. So what I call pillar number one is the perfect market research methodology. Okay. So what that is essentially choosing the market, right? So most people actually do property first, but we do market first, right? So when you buy a property, you need to know exactly where to invest. So 90% of investors literally they just buy on emotion, not data, right? And they choose the market first, right? And I'm sorry, they choose the property first, and then they're like, okay, well, this property looks good. Let me try to run the numbers and see if it works. So they never get to experience sort of like the overall data, right? And understand how all these markets work, right? So we use 2 types of data. I call it quantitative data and qualitative data. Okay, and I'm going to make some examples of each. Quantitative data is the numbers, the purchase price, the down payment, the closing costs, the points that you pay, right? The renovation costs, the estimated ARV of the property, what it costs to refinance, the equity growth and expense growth over time, right? And then how much does it cost us to furnish the property? And then what are the investors going to make, right? What are we going to make? What's going to be our cash on cash return, our IRR? So those are the numbers. But we're really most investors really miss is the qualitative data, and this is what we're experts in. Is we look at the market, we take the top performing 10% of properties, and then we analyze the numbers, but behind the numbers there's so much hidden, right? What you see here might just be a nice living room, right, with a big couch and then maybe a pool. But what I see is completely different. I see seating for over 10 to 12 people. I see ornaments in the back. I see a hookah on that table, right? I see a pool with a hot tub and a pergola that has 2 TVs, and I see seating outside the pool, and I see a slide that people love. They're going to bring their kids and create those emotional moments that people want. Because ultimately, people want what you see here. They don't want the numbers, right, in the back end. Like if they have the money, they'll invest. They'll invest or they'll pay for a short-term rental as a customer, right? But you have to make the emotional connection, right? So, and we've been able to do that through this with our customers, and also our investors as well. Okay, so the first step is really identifying the perfect market, right? So we focus on markets before properties. So first, we ensure favorable regulations to avoid uncertainty. So we look at regulations for the neighborhood and HOA, if there is any, right? Whether you're in a mountain or beach market or in a metro market, right? And then we shortlist these markets based on regulations into 3 to 5 markets using personal interest, aka creating your life by design, life first, business second, right? So we pick the markets that we care about or want to visit, which is what we're bringing it to all of our partners and investors as well, right? So these are properties that they can visit. We will do asset management weekends in which maybe we'll have a meeting in that city and we'll shut down the property for 3, 4 days to go check the property and maybe have an investor meeting right around that neighborhood or whatnot, right? So that is part of the goal. And then have the team, we already do this, by the way, have the teams to be able to go there while you're in that city, right? Your asset management team to do any upgrades or repairs, right? We recently did that, and we stayed in the property that I showed you actually, which is one of our better properties, for 3 to 4 days. During the weeks, I'm having meetings from this backyard in this gorgeous weather, right? So then we look at the budget, right? So we want to stay what we can afford. And also we look at the regulations. We make sure that these places are clear, stable, short-term rental markets with regulated laws, right? And things we can actually, monitor. And then from there, we look at the gross rent multiplier or price to rent ratio. And our motto is screening method is the 20% rule, right? So we target properties where annual revenues are at least 20% of the purchase price. And if they're not, we simply don't buy them because they don't make sense. When I underwrite properties, they break even at about 15, 16%. So somebody could think, I'm going to invest in this property and it's making 18%. I think I could pass through, but you're risking big time because your margins are so small. Most of our properties, so for example, the St. Louis portfolio that we are purchasing right now in St. Louis is 29% of the purchase price is coming in on revenue on a projected yearly by yearly basis. Okay, so that tells you a lot. So then we look at the market saturation and we see what type of saturation, aka supply versus demand, has happened in the last 3 to 5 years, right? And we obviously skipped 2020 and 2021. Okay, so here's a case study. So this is a high yield market. It's called Cypress, Texas. I took over this property with our team and we did a full exterior renovation on the outside. We did the entire pool renovation. We added a pickleball court. The inside was done by our team. This is at the end of 2023. And then before we entered the market, we aligned the market with our investment goals. We looked at the STR regulations. There was no HOA, right? But there was regulations, and there was not even regulations in Cyprus, but they go by simply just everything is allowed right now. It's a smaller market, no HOA, and then once the regulations come, which they don't seem like there are going to be regulations, but Houston is adding regulations, so we'll be able to sort of like match those regulations to Houston. Okay, we screened the financial viability, 20% plus gross rent multiplier, and I'm going to walk you guys through the numbers. Then we evaluated demand trends and seasonality patterns to make sure that we're looking at a seasonal market just like every other market, or in avoiding volatile markets. And the difference is seasonality, you can predict the patterns, volatility, you cannot. Okay, and then we apply the sweet spot methodology to select a high yield submarket, right, and property type to eliminate the possibility of saturation. Okay, so now this is the property. We made the upstairs really cool, sort of like an area for makeups, getting ready, and then the interest was unique property with potential to create 120,000 in annual revenue on a $250,000 race that we were doing. No HOA regulations in place, screening at 29% of purchase price. So we purchased it for 455 and $131,000 in projected revenue, right? So that was what I underwrote it for. Okay, we looked at low seasonality, right? And there was demand growing more than supply because there's neighborhoods there, and ours is more of a secluded area where there's not too many neighbors, right? And then we found that the sweet spot for this market, right, was 4+ bedrooms with 3+ bathrooms, a pool, hot tub, and backyard amenities. So we looked at the market and we identified it on the right side. We saw that it was right around where it says Lakewood Forest. And then we looked at it. We looked at 23 other properties right below Northwest Freeway, Jersey Village. And then so we looked at the average annual revenue of that market, occupancy rate, average daily rate. And then we went in and honed in a little bit more, right? So this is how we found a high yield market in 3 minutes, but obviously took like maybe 3 hours to do so, right? So I gave you the summary, the quickest summary I could. Okay. We didn't even look at a property before we analyzed and looked at the market, right? And if the properties pop up, I go look at the market first, how it's performed, right? So let's just say someone sends me a property. I don't go find what that property is going to make. I first go look at the market and submarket. So now let's see how we find the perfect property within that market. Okay, so a few takeaways here from the Empress market selection process is number one, regulatory stability is non-negotiable, right? Always verify that STR regulations are favorable and unlikely to change. This one, for example, is a very small town outside of Houston, and there's no small towns that have. I think this town doesn't even have a like a city downtown, or it's just maybe 10,000 people or whatever, maybe less, right? So 20% rule is just a baseline, not a bonus. You always want to make sure you're above that, right? And sometimes the numbers won't tell you that, but you can create that if you see potential in some markets like St. Louis. there are not a lot of heavy operators in St. Louis. So we're coming into this market that is emerging. It's mid-sized. There's $28 million visitors a year, and we saw a huge potential upside in that market. We saw that there was no professional operators, maybe a couple, and so it's a perfect market for us to come in. We're 5 to 10 years ahead of the curve there. Okay, so for us, a property has to make 20% of its purchase price in annual gross revenue to be considered viable. Okay, then we looked at the demand versus supply trends that drive long-term profitability. So this is also a must. We invest in markets where short-term rental demand is growing faster than the supply. It's what I call seasonality and equilibrium. Right, we want to look at how these perform. Sub-market selection makes or breaks the performance, right? Because sometimes you can look at a market and then honing into a sub-market, you might go into the wrong sub-market. Your property's in that wrong sub-market, based on the distance or the amenities that are there. It could complicate things. So we always try to find a sweet spot to ensure that these properties are positioned for higher revenue within that market or sub-market. Okay. And then we do a financial analysis that's very data driven. We use AirDNA and about 5 other data sources, right? And I'm just giving an example with AirDNA to validate revenue projections. We build a model out that shows the equity growth, the expense growth over 5 to 7 years. And we look at the trends before making any investment decisions. So that's pillar number one. And those were the takeaways. I hope that you are getting all of this. And if you're not, feel free to drop any questions or comments here in the channel. I'm going to spend more time on the front end acquisition side of things than on the back end pillars. So just so you know, I'm spending a little bit more time. It will still be on time here to be able to finish here by the top of the hour. Okay, so pillar number 2, it's the perfect property and acquisition strategy. And it's what I call the sweet spot formula for short-term rental investing, right? So the right property can create generational wealth. The wrong property can kill your investment, right? That's why we use our own proprietary formula to find high-performing STRs with properties that are aligned with revenue potential, right? Projections from accurate data, guest appeal, and the qualitative data, right? That we can't see, which is location, amenities. Sometimes the size matters, right? Having these large areas, large rooms, open format, living areas, and larger hangout or amenitized areas are very, very key, right? And then we look at the value add potential and more in terms of what the property looks like. So for example, the property that I'm going to walk you guys through next, which is the same case study as before, had a large backyard, right? And we saw that we could add some really cool things that I'm going to walk you through next, right? So then we build a buy box. So building a buy box is basically creating the data points based on the quantitative and qualitative data. And it's basically creating the perfect property within the market data and niched down into sub-market data, right? So we're not looking for just any property, even if it looks good. We're looking for the perfect property, which is within that buy box. For us, that's a golden rule. Okay, so now let's build a sweet spot buy box. Okay, so step number 1, you identify the most profitable areas based on price to rent ratio. Step number 2, you clean and analyze the data from several sources. So we'll download, for example, AirDNA's data for 3 or 4 parameters that we use, right? We don't use every parameter, we just use the most important parameters, right? So we want to clean all of the bad listings because there's going to be some bad data there, right? So, and then we spot revenue driving features, which is the qualitative data, right? AK, pool, backyard, game room, outdoor kitchen, decks, hot tubs, whatever it is. And then we create a buy box basically based on all of those metrics. There's about 15 points for our buy boxes, and I'm actually creating one for Hocking Hills right now up in Ohio. I was just in Ohio this past weekend meeting with some partners, and I'm creating a buy box for Hocking Hills, and I'm looking at some amazing properties over there, right? So when you create a buy box, for example, right, the buy box will have some of these components here, right? Property type, bedroom, bathroom count, amenities that drive revenue, size of the rooms, how many rooms, what are the living areas look like, and probably 10 other metrics. Okay. So, the next step for us is underwriting the deal and executing, right? So when we underwrite these properties, we underwrite for three scenarios, starting with worst case. What happens if we really suck at this thing? If this slips out, which it has not happened yet, right? So we want to underwrite for worst case scenario, realistic scenario, right? And then also best case scenario or target, right? So now what the underwriting for our properties in St. Louis is we've got a 25% stress test on the revenue. So our actually target is 39% of revenue. What we are coming and saying this is what we can hit is 29% of revenue, 29% of purchase price in revenue. Our target is around 39. So if we do the best, we're going to hit 39% of this $12 million or $10 million portfolio, right? In revenue, right? So, but we know that for sure we can hit 29% or 2.9 million per year, okay, of a $10 million portfolio. So now the worst case scenario for us is essentially has to be profitable, right? And if it's not, we actually pass, right? So for us, that worst case scenario would be like 23 or 24%. So when we stress tested it, we were very confident that we could hit the numbers and we could still be profitable, but we're not, right? So um, okay. So then underwriting and executing the deal continuation is ensuring the deal works at worst case scenario revenue, looking for outliers with potential for higher than average returns, protecting against downturns by focusing on the top 10% of property, buying in markets that are slow growth, and essentially planning out an exit with a slow growth and under projecting like we just did our exits. Those are the things that protect us from a lot of these risks, right? Which there's always risk when you buy real estate, and you want to work with people that create those protection stress tests and they go in slow growth markets. And what I mean by that, just to be clear, when you see all these short-term rental people on YouTube, Airbnb, 90% of them are going to be mom and pop. So, and they're buying in market, they're buying more expensive properties, but they're buying in markets that are very volatile on both the real estate and the vacation rental industry sectors, right? So, what that means is that the real estate's going to go up and down. It's going to be volatile, but you don't know when. You can't predict that. So, you can't sell, volatility. You can sell predictability, right? You could sell stability, but you cannot sell things that go up and down. Like, let me give you an example. A lot of people are hurting in Paradise Valley in Arizona. I am working on a deal right now with an investor his property was worth 5.5 million and now he can't even sell it for 4.5. So he's came to me and he rented it for some time and now he's like, I need to turn it into a short-term rental. But that's unpredictable when your values are going to go so down 20, 25%. And that's what's happened in both industries and a lot of sectors. And that's the real estate industry and the Airbnb short-term vacation rental industry. Well, we don't do that, right? We do not do that. We make sure that we find predictability in everything we buy. Okay. Oh, sorry about that. So again, we pull the trigger when all the data supports a strong cash flow investment. Okay. So now let's walk you through the same case study. And the case study was walking you through is basically the projections versus reality. Okay, so our 2024 revenue for this property, year zero, was 100,000 projected because we launched it in March, right? So, and then our yearly projection for year one, 2025, was 132. So I underwrote the numbers and the profitability for investors at 132. Okay, but here's what actually happened. 2024 actual revenue in 8.5 or 9.5. We launched March 15th, so I might have made a mistake here. I apologize. We launched March 15th, so I realized that should have been 9.5 months. Was 149. Okay, 149,000 for that one property, which is a little bit over 48%-ish, over year one's projection, right? So if it was maybe nine and a half, might be a little bit less. So, but then the cash flow for those 9.5 months was 32,000, despite of many issues with capex, the 3 to 4 stabilization months that it took us to stabilize the property because of big sewer issues that I'm not going to have to tell you about, right? So real world challenges, guys, are unprojected capex, and this does happen, was over the top, was 29,557 base because of the sewer issues. There was what do you call it? A septic system, right? Septic issues, and also we had a hurricane in Houston. Who would have thought in one of our 3 units in that building got flooded, right? And the net cash flow was still higher than we expected, right? So even with unexpected cost, the property delivered stronger returns because we underwrote it, we looked for the right market, we did everything I just showed you. Okay. So then the future for this year, we are killing it. Okay. Our revenue on this particular property was underwritten at 132. Our projected target based on last year's revenue, 170,000 plus, on track, crushing it, 16 to $18,000 a month. And that's in the low months. March, we're not even in, we're just in May now. March, we brought in 16,500, right? Where I underwrote it, I think about 30% below that. Okay, so we're gonna cash flow about $60,000 for this particular property, even when we predicted 32. Okay, so it's on track to become a high yield cash flow asset. Okay, so let's continue with the case study. Well, just going back and forth. Here's the pictures. Here's us in February before we launched it, finishing up the pool. They extended it. We even built a kids pool right next to the regular pool right there. And this is what it looks like today, right? So we've got a really cool backyard. And I didn't even put a picture of the pickleball court. We added a pickleball court there. So key takeaways from property and acquisition strategy. Not all properties get created equal. So you do your analysis before you buy. Compare top 10% of market to set revenue expectations, and then bring down that revenue with a stress test, right? So you know what you could potentially hit on if you hit your target, but then you have a stress tested 20%-ish less underwritten revenue and profit projection when you do this for yourself or you do it for your investors. So also we use creative financing to maximize cash flow. Okay, so that's it for pillar number 2. Pillar number 3 is when we really finish the outdoor amenities and interior design and the finishes of the property, right? Which is the 3 aspects, and it's probably the heaviest. So we go now into furnishing the property, and this actually crosses over with also painting the walls and creating the look and adding trim to the walls and really cool things, right? So short-term rental design is literally a revenue multiplier, and then I want to break this down in what I mean by design. There's inside design and there's outside design, right? What I used to do when I got started, I would get these apartments and I would think that the money came from the inside of what the property would allow to sleep and people booking these properties, but it's really not like that, okay? The real money, or people actually pay and love properties that have a large outside, where the real design is a hybrid collaboration of inside design, your finishes, okay, and your outside, right? Your outside amenities, because that's what creates the real experience, folks. That's what creates the memories that I'm telling you. People can hang out inside and cook and have a good time, but outside is where the true memories are created. Okay, imagine you going on vacation or just visiting or work or bringing your family, right, or visiting your family, and you get a property, you just hang out inside, right? But think of a large backyard, and then you get to hang out outside and be by the pool and be by the fireplace. Like that's what people love. So that's what we really focus on. Okay, your STR isn't just a property; it's a guest experience, and that's why I call it experiential, right? So our motto is experiential short-term rentals right now in the domain, and we're going to be launching a book on experiential short-term rentals soon. So design, honestly, is a huge impact to your nightly rate, how much each property makes per night, your occupancy and booking conversion, right? How many times people will click to the percentage that they book and what occupancy you have. We've actually redesigned many properties, and sometimes when we were buying properties and we're just getting started, my wife and I would buy these properties and we had 30K and we would maybe do a creative finance deal. We would put 5,000 down and then we would put, 5,000 for the closing costs. And then we would spend 20,000 between the design, the finishes, the walls, the trim, and the furniture. Imagine, right? And the properties did okay, right? But the true impact to your bottom and top line is made when you combine both interior and exterior, right? It gets way more of everything, right? Your money goes up, your occupancy goes up, people love your reviews go up. You have repeat guests, right? So let me give you an example. This is a smaller property that we did, but it was a really cool design, so I wanted to show you. And this is what it looked like before, but this is what it looked like after. We added the fireplace on the right, so the whole thing was built. We added the thing above the fireplace. I forgot what that's called, right? We added the big bars on top, right? Furniture, and then we did the trim on the walls all across the left side of the walls. That trim you see, this was just a regular basic builder grade new build that we bought as a subject to property in 2021, right? And today still makes like 65. It's only a 3.2, 65,000. It's one of the smaller properties, but we built 100K in equity. So we are probably going to sell this thing, and it's in close to the middle of Houston, downtown. And it looks like that now. It's really cool. If you see the left wall has really cool trim, really cool things that are hanging. And we call this the trendy farmhouse, right? So it's a cool property. It's just an example of just an interior, sort of a amenitized interior that we made look beautiful. And this would have made 25K a year, but we've been averaging 60 to 65,000 in this 1,600 square foot property. Okay, so case study. STR revenue jump with experiential design. The big problem is many short-term rentals are underperforming with low average daily rates and inconsistent bookings. And we saw that in our portfolio when I first got started also, right? The designs were outdated, blending in with every other property. So they're just one in a million, right? And then the changes really come when you rebrand the properties, you do the interior cohesive experience driven design, right? Which creates the look. People love to just be emotionally connected to the look, and they're like, "Oh my God, this is cute! This a little thing, and there's toys for the kids, and this and that. We can hang out, and it's very cozy, right? You think about hanging out in a dead, empty, or flat, place versus a cozy, welcoming, and that's what people think about when they're buying, right? When they're renting these properties. So we rebrand them with the experiential design. Then we add the what I call the finishes, which is your walls, your trim, and all that I just showed you, and then you top it off with revenue driving amenities like fire pits and feature walls and curated interiors and exteriors. I forgot to put that there, right? The exterior is the big player. Now, if you just do exterior and no interior, you'll boost up 20-30%. But if you do both, right, and you do the curation of the walls with very thought out, functional, beautiful, then that's like the triple what do you call it? The ultimate, right? The Instagrammable. So Instagrammable properties are the ones that go viral. And we didn't start like this. We just started doing regular properties, right? And we've evolved to this with experience, with many, many years of experience, right? So now we only do those types of properties. So, and these are properties that experience, increases in ADR of 80, 100, 130 So you're charging 200 and you spent 20K and now you're charging 400 a night and you're doubling your revenue from 50 to 100 or from 30 to 60 or whatever. Obviously for us, it makes sense now to do these $500,000 average price properties, and that's what our average purchase price is across the board, especially for our St. Louis portfolio is 525, because those are easy to sell, aka they de-risk the deal, right? And also they have large enough rooms and areas and backyards that we can create experience. Okay, occupancy rates have skyrocketed in all the properties that we've redesigned and repositioned. Guest reviews always highlighting the unique experience. They love certain things. So this is the power of experiential design, folks. So here's another example, and there's another property that we did that I showed you earlier, right? And here I'm going to walk you through the opportunity of bad design, the opportunity cost of bad design, right? So imagine the cost of staying average. It's missed bookings, low nightly rates, zero word of mouth marketing. Okay. Now imagine being fully booked, like this property is a property we did in 22, also in Houston, right, in 2022. And I mean, we launched it, we did a full renovation, we did all these really cool design. We invested total of about 135, maybe 145,000 cash out of pocket for the deal altogether. And today it makes about $110,000 with about 30,000 in net profit. Not one of the best, but it's still up there, right? So guests love these types of properties and they will share them with their friends and they'll rebook. We just had a rebook guest a book for Memorial Day weekend that spent $4,000 for 6 days in one of our properties, and they come back year over year. So you start creating that repeat clientele, and the difference is your design, your finishes, and then your amenities, right? So, and I'm calling all of that design. Okay, so and here's an example of a calendar in 2020 empty, and then our heavy calendar today, right? And this is like most of these properties are going to be in Houston, and Houston is always last minute for because it's a metro market. So most metro markets are last minute, so you'll see some of the empty areas here on some of our properties. Okay, so some takeaways here, folks, on STR design. It's create an Instagrammable stay. Guest book experiences, not bets. Luxury linens, bold design, and curated themes increase bookings. Invest in high impact visual storytelling. So every property we do has a story to tell. And I haven't walked you through that, but people love stories because they can see themselves in those stories with their families. Okay. So that is all for design. Now we go to the last two pillars. I'll make it a little quicker. I know we've got 14 minutes for the top of the hour. So our fourth pillar is STR marketing and revenue strategy. Okay, so what that is truly is the revenue game plan for us is you book more nights and you get higher rates because you already did those three other things before. The three pillars are already done. So you've set the foundation, which is really understanding the market and grabbing the property, right? That's the foundation. And then you've really secured your success by putting thoughtfulness and a solid budget for your interiors and exteriors and finishes, right? And then now we go into how do we market that thing, So a beautiful short-term rental is nothing if no one books it. So this is where a lot of hosts also make a mistake unless they're professionals like us, right? So a good marketing system has SEO and AI, excuse me, SEO and AI optimized listings listed on several platforms with beautiful pictures, right? Dynamic pricing to maximize revenue per state. And I want to share something as I walk you through these two bullet points. Right now, we are doing several photo shoots. One for that property I just walked you through, and we revamp our properties every few years. So we're doing a revamp on that Alvin, really beautiful outdoor property. We've put about 10,000, and we're spending $950 for the photo shoot. We're doing about 6 different types of shoots. And it's Some of it's going to be lifestyle. We're going to be in it. We're going to go there for a couple of days next week. And I'm going to work from there all day and having these really cool webinars or meetings. And then I'm going to jump into photos for about an hour so that we can have a lifestyle thing with us, right? And we're also doing another project at the end of this month in Orcas Island, Washington, in which we're hiring a $2,200 photographer that's going to bring his own family and it's going to shoot a 7,000 square foot property. And that's why he's charging so much. But the lifestyle, the memories, the emotions is the true component that we focus in, which is like your foundation of anything that you put on any short-term rental platform. Okay. So dynamic pricing is the second bullet point. And we maximize the revenue per stay because we're using algorithms, right? And we're using manual, a little bit of manual, right? But about 90% algorithms. I personally oversee the pricing strategy of our portfolio, and is one of the most important things that we do because these tools like Price Labs and other tools that are out there, they only work to a certain extent. So let's just call it, they'll push you through mostly parameters that will close in your prices, your minimums, and they'll elevate them during peak and low seasons. But what you can't control with that is you cannot control sometimes last minute consumer behavior because the industry or the market or the sub-market will change all of a sudden sometimes because of news or what's happening or the weather or a hurricane. So it takes the algorithm a little bit to adjust. So we go manually and work within somewhere around 30 days for all of our properties to manually make the tweaks so that we can have a higher occupancy. So our portfolio occupancy is average about 60 to 65%. And I know the first image I showed you showed like 49 or 50%. That shows last year, and it shows a lot of the properties that were blocked, and it also shows the properties that were launched already. So we try to really maximize that way, and it's very healthy, 60 to 70%. I would say if somebody tells you 98%, they're straight up lying to you, or they're doing all apartments or smaller units. In houses, 65, 70 is solid, right? 65 is solid because you have your low seasons, that's going to be about 30 to 40, and your high seasons is going to be about 80, 85. So we do have some 97, 94% occupancy months, but they average at about 60 to 65, 70. Okay, so again, amenity-driven photography, which people want, creates the emotional connection, automated guest messaging, and a personal touch, right? So now we're implementing AI into this, and nobody could tell that it's not a human being because the human presses the button to approve it. Okay, so we don't have AI just talking to you as a guest, right? And then lead nurture. Okay, so let me walk you through a little bit of our portfolio. We use several platforms to manage them. We have a back-end accounting and bookkeeping software. We spend about 30,000 a year in technology between all of our softwares that manage the back-end, which automates operations. Okay, so quick case study on the revenue growth, doing dynamic pricing. So let's just say that we have a property, or in this case, right, we implemented a real-time pricing adjustments based on market trends. This operator that we partnered with didn't have the dynamic pricing. They were just manually setting the prices, didn't have a tool, so they didn't have the parameters. So on top of making you work even more, right, then you're also losing out on thousands of dollars. So now we're taking market trends, right, and a competitor analysis and maximizing on your heaviest nights, right, and then also getting you booked on your last minute, right, which results in a 25 to 35% increase in total revenue when we do this, and we've done it countless times. Okay, so the problem really is that a lot of properties are underperforming with inconsistent bookings and low nightly rates. And the owner gets stuck, and I was stuck myself in a price war. You don't know what to charge, and you don't want to go below X, but you don't know what the market's telling you. The market determines what you pay for that, what they pay for it, right? And what you should price it at, right? So it's just it's a chase to it's a chase to the bottom. It's a race to the bottom for saying. So we implemented dynamic pricing. We use price laps, and we don't use Revenue IQ anymore. They got banned from Airbnb, for some reason. I'm not really sure. We still do the manual thing, right? And then we adjust the rates last minute, depending on what the last minute is called in each market in real time, based on market trends and competitor analysis. And then we optimize for occupancy during low seasons and maximize revenue during peak season. Okay, so and then you increase it by 25 to 35%, right? And then you outperform local competitors by staying ahead of market fluctuations. And this could really take about 30 minutes to an hour a week for a 25 to 30 property portfolio. It's if you set it up correctly on your tools, it'll be much easier. Okay, for your manual part. So this is one of our tools that we use called Price Labs. We have a lot of our properties there. Okay, so a few takeaways on marketing and pricing. So build a multi-channel strategy to fill in the holes. Optimize your listings with keyword-rich titles and descriptions. Leverage direct bookings for increased profit margins. We have a 90% fully developed in it. We've had one out, but it's been redone completely, and it has pretty much everything. Direct booking site. Okay, it's a direct booking engine, we call it, and it's taken us about 4 to 5 months to finish it. Okay, so automate guest follow-ups to drive repeat bookings, which is very, very, very important. Okay, so in the last pillar here, 6 minutes down on that clock, it's guest experience and operational excellence, which we are proud to say that we focus, and really we create the wins by creating experiences. And those experiences are mostly created, folks, by doing everything I told you. Because if you come into a crappy property that doesn't look great and it doesn't make you create memories, you're going to be looking for the cracks and the mistakes. But if you come into a beautiful property that makes everyone forget that there's all these other things in the property, you're going to automatically get these reviews because memories are created and people review based on feelings. Okay. So winning in short-term rentals isn't about handling guest requests. It's about anticipating them. And what I call that is guest experience versus customer experience, right? We focus on guest experience, which is anticipation, not a customer experience, which is reaction. Okay. It's coming after the problem. So that's how we deliver, or part of how we deliver five-star experiences, besides creating a beautiful property, right? We automate guest messaging, concierge services. We create a smart locks and seamless check-ins, right? We create reputation management and review automation, and a few more things. Here's a few of our reviews that you can check out. And some of the communication, right? Very thorough, detailed communication that I wanted to show you guys. And that's how we create 30% repeat bookings with VIP guest experience, right? So for example, case study here, we transformed this property into a guest magnet. It gave us 5-star ratings across the platforms, and we had referral and repeat bookings at about 30%, and then automated systems that were created reduce the hands-on management for us. Okay, so all around, just really focusing on building the systems and operations, it pays off big time because it just reduces all the friction out of this business, right? So, and don't get me wrong, it took us years to build that. I used to run all of this, and now my wife runs the entire team on the operational side. I run the finance and strategy, as well as the pricing for our portfolio, and I'll be overseeing obviously the fund and any other deals that we do in the future. So now let me cover one more thing here. Hard and inconsistent bookings are in a mix of negative reviews are going to come from sometimes new bookings, and as you get the complaints, sometimes if you don't automate, you're going to have some delays and issues with check-ins and missing amenities. We've been through all that, and because we've automated, we've created the processes and the checklists through the platforms. So you could do all of this in back-end platforms, right? We've eliminated a lot of that. Okay, so don't get me wrong, it's nothing. Business is never going to be like very hand and dandy and beautiful. It's business is solving problems. So I'm not like telling you that we don't have any issues or problems, especially hospitality. There are always issues. I'm just telling you that we have eliminated 60, 70, 80% of them. Okay. So, and the solution was automation and communication and smart locks. Okay. So, anyway, we are at the uh, cusp of things, and I want to close out here asking a few questions from you and just making some last minute or it's essentially last bullet points here, right? So you get one star reviews, lost bookings and damaged reputation, and you change that by doing the operational side and operational excellence. Okay. So takeaways: systematize everything, housekeeping, maintenance, guest messaging, deliver premium touches, welcome gifts, seamless checkouts and check-ins, and turn guests into repeating customers with a loyalty program. Holy bananas. Whoa, I did that
Take a
in
breath.
what?
Take a breath. Good
I
job.
am just talking so fast here, guys. So I apologize, but I was trying to be on time here for you. Take a breather.
That
You
was
did it.
awesome.
George, we
Rome
appreciate
wasn't
that.
built in a day. Rome wasn't built in a day. I'll lock it down 30 more seconds here. Drew, I
Done.
appreciate that. So amazing. I hope that is amazing that you have understood now, and now you know our process. This is what we cover, right? A seven-figure process with market research methodology, our perfect property acquisition system, perfect short-term rental design, STR marketing and revenue, and five-star operations. Okay, thank you for attending, everybody.
That was
Appreciate you.
awesome.
Thank you for having us. Great.
Yeah.
So
Does anybody have any questions before we pop off? I just put a few little things in the chat as he was going to explain some
great.
things in case you didn't know what they were. But did anybody have anything specific they wanted to ask?
Are you gonna have like a follow-up as to how we like link up with you guys or
Do you want to put something in the chat, Drew?
Yeah, so I'm actually going to follow up with an email here. So there's really kind of different avenues that you guys can take. We haven't touched on it because we wanted this to be purely a masterclass from George. But as we mentioned kind of in the beginning, if you are an accredited investor, we do have an opportunity with George through our fund to invest in a short-term rental portfolio that is purely a passive investment. If you're interested in just some of the projects that you have going on, there will be links in an email that I'm going to send out within the next 10 to 15 minutes that everybody will get. So you'll be able to get on our calendars just to like discuss any of your projects, private money loans, or if you are interested in the investment opportunity and are an accredited investor, you can jump on and talk with us about that. And there'll actually be a link to our investment portal there as well. So I'll put everything in an email, and it already has all the links depending on what you're interested in moving forward on or what you'd like to discuss. So
yeah, no, I'm brand new as far as launching my own. I've had some before, but for the most part, I've managed other people's properties. But yeah, I'm looking to invest and buy a couple of properties myself. So I'm pretty fresh at the whole investment and everything. I've had a couple before, but they were my own places and I traveled. So I would Airbnb them out when I would travel, which I traveled all the time. So, but you know what I'm saying?
Yeah,
nice
great strategy. I'm glad you came today.
I'm so thank you so much for inviting me. I saw the invite. I was like,
oh,
yes.
Yes,
So,
of course.
Thank you. Everybody, thank you for your time. I really appreciate it.
Yeah, of
I
course.
love it, guys. Thank you for coming. Do you guys want me to cover some of the stuff on the chat?
I think most of it in there was Tracy just kind of putting in information. There wasn't any specific questions, but if anybody does have questions before we jump off, if you want to either just raise your hand or you can throw them in the chat if you're not able to. We can answer any questions. Otherwise, we can sign off here and we'll follow up, like I said, with that email and then just more information and links to connect with us on our calendars and things like that.
And we got to talk about Hocking Hills because that's one of my favorite places.
Is it? I was just there this past weekend, Tracy.
Beautiful.
I'm
beautiful, gorgeous. Yeah, we went to the Conkle Hills or Kunkel Cliff or something,
Yeah.
and it's gorgeous out there, and it's one of the most affordable, affordable on the real estate side,
There are
consistent on
some
the
really
gross,
affordable places there. And
yeah,
one of the neatest Airbnbs out there was a big tree house.
I love those.
yeah, yeah,
It was
they're
Like
beautiful.
amazing.
Yeah.
Yeah.
it's just
So those
different
those go
unique
viral.
ways and
Mhm.
everything.
Have you guys
Yeah.
seen the cave? There's a cave. I didn't even know it was there, but there's if you look for caves on Airbnb on the categories, there is this super cave, and it's in it's below a rock, and then you're literally going into the room, and they built the rock and they built all this cool stuff like a house in a cave. It's really cool.
Amazing.
I've never
Oh,
seen
that's
anything
awesome.
like it, and that's there.
That's stuff that I would do. Like once I get a couple like obviously solid, stable buildings that will have people in them, like having different types of unique space.
Yeah, it's
Yeah,
awesome.
Yeah.
yeah.
All right. I think that's it. So thank you so
Yeah.
much, George, for
Thank
imparting
you,
your
George.
wisdom on all of us. We
Thank you,
appreciate you
guys.
so much. And thank you
Thank you.
everybody for joining. We really appreciate it.
Absolutely, my pleasure. You guys have a great one. Have a great weekend, everybody.
Y'all have a great weekend.
Bye.
Bye.
Bye.